3 bullish signs that could completely change the story of SoFi stock this summer. And here's the strange part. Most investors are watching the stock price, but the people making the biggest bets on SoFi aren't watching the stock at all. They're watching something else. Something that could determine whether SoFi becomes just another fintech company or one of the biggest winners of the next decade. And if you're only looking at the chart, you might miss it. Imagine this. You're an investor. You see hundreds of financial companies fighting for attention. Banks, lenders, investment platforms, crypto apps. Everyone is promising growth. Everyone claims they're building the future. But then you notice something unusual. SoFi isn't trying to win one part of your financial life. It's trying to own all of it. And that's where the story starts. Because for years, many people saw SoFi as a student loan company. Nothing more. A niche business, limited potential, easy to ignore. But management had a completely different vision. They weren't building a product, they were building a system. And that distinction changes everything. Because products can be copied, systems are much harder to replace. But this wasn't the real challenge. The real challenge was convincing investors that the transformation was actually happening. You see, building a financial ecosystem sounds exciting. Executing it is a different story. Every new service creates new risks, more complexity, more competition, more ways to fail. And SoFi decided to take that risk anyway. The company expanded beyond lending, into banking, investing, credit cards, financial planning, crypto, and newer technology initiatives. Each move increased the opportunity, but it also increased the pressure. Because now expectations were rising, and Wall Street can be ruthless when expectations rise faster than results. This is where the first reason appears. Growth. Not just growth in revenue, not just growth in products, growth in engagement. The company keeps finding ways to bring customers deeper into its ecosystem. A loan customer becomes a banking customer. A banking customer becomes an investing customer. An investing customer uses additional financial products. One relationship becomes several. And that's powerful. Because the more connected the ecosystem becomes, the harder it is for customers to leave. But here's what most people miss. Growth alone doesn't create great businesses. Many companies grow, then collapse. The most dangerous decision came later. Profitability. For years, investors were willing to tolerate losses if growth looked impressive enough. But that environment changed. Suddenly, growth wasn't enough. Companies needed to prove they could actually make money. And this created a huge test. Could SoFi continue expanding while improving profitability? Or would growth begin to slow? This became the second reason investors are paying attention. Because if a company can combine strong growth with improving profits, the market often starts viewing it differently. Not as a speculative story, but as a real business. And that shift can completely change how investors value a company. But even that isn't the biggest reason. The biggest reason comes from something much larger, a change happening across the financial world itself. Think about how younger generations interact with money. Many don't want traditional banking experiences. They want speed, convenience, one platform, one app, one place to manage everything. And that's exactly where SoFi is positioning itself. Not as a product, not as a lender, but as a financial operating system. And this brings us to reason number 3. The possibility that SoFi is competing in a much bigger game than most people realize. Because if management succeeds, the company won't simply gain customers. It could gain habits. And habits are incredibly valuable. People change stocks. People change credit cards. People rarely change routines. If you become part of someone's daily financial life, you gain something much stronger than attention. You gain loyalty. But this is also where the risk becomes greatest. Because bigger opportunities create bigger expectations. Execution has to be nearly flawless. Competition never sleeps. The financial industry is crowded with powerful players. Some have more money. Some have more customers. Some have existed for over a century. And every one of them wants the same thing: the customer's trust. This is where it almost falls apart. Because trust isn't bought, it's earned, slowly, painfully, one interaction at a time. And one mistake can damage years of progress. That's the price of trying to build something bigger. The higher you climb, the further you can fall. If you want to understand how global brands actually think and build systems, I've broken all these principles into a practical guide. Link in the description. And maybe that's the most important lesson here. This story isn't really about a stock. It's about a strategy. The strategy of building systems instead of products, relationships instead of transactions, ecosystems instead of individual services. The companies that master that approach often create enormous value. The companies that fail often disappear quietly. So can SoFi stock explode this summer? Maybe. Maybe not. But that's not the question smart investors are asking. The better question is this: what kind of company is SoFi becoming? Because if the answer is what some investors believe, the biggest move might not happen this summer. It might happen over the next several years. And that's what makes this story so fascinating. Not where the stock is today, but where the company could be tomorrow. And that's the part nobody knows for sure. If you found this video helpful, please consider like and subscribe to my channel so you don't miss new videos.